Washington Journal continues.
And joining us now is Chuck Collins. He's a contributor at the American Prospect, and he's here to talk about his piece about the rise of contract mortgages and the risk that they pose to buyers. Chuck, thank you so much for joining us today.
Thanks for having me, Kimberly.
So your piece is called Private Equity, the New Neighborhood Loan Sharks. Explain that title and what this piece is about.
Well, what we discovered is that there's kind of a resurgence of an old practice that we thought was sort of phased out or illegal, which was pushing people into these contract for deed or rent to buy mortgages. They're kind of predatory in that if you miss a payment, you are evicted and you lose whatever equity you've built. And so what we discovered is these Wall Street firms that bought up all these foreclosed properties don't want to invest anything in them. They're just trying to sell them off, and they can't really rent them because they're in terrible shape. They can't really sell them with a bank financing because they wouldn't be acceptable for a mortgage. So they sell them to people with these contract for deed or rent to buy terms. And it sets people up, basically. It's sort of the latest chapter of what I consider kind of predatory lending.
And why write this story now? What is happening now? Are we seeing an increase in these type of loans happening in this period, and what's leading to that?
Yeah, what happened is some Wall Street firms like Vision Property, Harbor Properties, they bought up thousands of these units, and they're trying to unload them. And so they're aggressively trying to get people to enter into these rent-to-buy arrangements. And now people are kind of getting to the point where they're realizing what they overpaid for the house, or it has deep system problems, and they're feeling the strain. And so I think people are now at risk, or we're starting to see this problem of, I call it wealth stripping. You know, people put their own sweat equity and money into fixing up a house, and they're just realizing the terms of the agreement is that they don't actually own that house. They don't actually get the deed until the last payment has been made. And I think it's part of what contributes to the wealth gap in this country and the racial wealth divide, because these are folks who are, you know, they can't get access to traditional loans. A lot of these banks have left these communities in terms of making loans to small home buyers, under $100,000 loans. And so they're in this situation. So and I think that, consumer advocates are starting to see these cases popping up all over the Rust Belt and in the South, and places where there are a lot of foreclosures.
And your article starts out talking about Detroit as a place where you're seeing a lot of these folks realizing that they have 30-year term loans that they may not be able to keep up with, and that they would lose what they've paid. Talk about that. Places like Detroit and other Rust Belt cities, is this where you're seeing this happen more often?
It's where there were a lot of foreclosures. So, and I spent some time door knocking in Detroit with this group called Home Savers. We were just trying to understand how this is working. And I remember, I talked to one woman. She basically, bought a house without a traditional mortgage, without an appraisal, without an inspection. Now she's realizing, oh, I have a 15-year contract for deed. I won't actually get the title until I make my last payment. And she's in this no woman's land, no man's land, where, if something goes wrong, she's on the hook to repair it. So it's the worst of being a tenant, where you can't call the landlord, and it's the worst of being a homeowner, because you're not actually building any equity or savings in the house. Right. And so she was feeling that vulnerability, that if she misses a payment, she's going to lose all the sweat equity and money she's been putting into that house.
All right, we were talking to Chuck Collins, who's a contributor to the American Prospect, also director of the Institute for Policy Studies program on equality and the common good. He's here talking about contract loans and the effect on those who use them. We have regional lines for this discussion. If you're in the Eastern or Central time zone, you can call 202-748-8000. If you're in the Pacific or Mountain time zones, you can call 202-748-8001. And if you've had experience with a contract mortgage, we have a special line for you, 202-748-8002. We already have calls coming in, but before we get to that, quickly, can you explain exactly what is a contract mortgage? Explain how it works for the viewers.
Yeah, first thing is, it's not a mortgage. It's essentially a rent to buy agreement, but You make, let's say I'm selling you this house. You walk by, you see a sign that says rent to buy, and you call the number, and basically I send you the agreement, which is you make a monthly payment. You are responsible for all repairs, property taxes, back taxes, systems repairs. You're responsible for all the headaches of home ownership, but you don't actually get the title till you make that last payment. And I should say that in the 50s and 60s, when African Americans were excluded from being able to get FHA mortgage insurance and other traditional loan products, people were pushed into these contract for deed mortgages, rent to buy, lease to buy. There's a number of different names for them. And people organized in cities like Chicago. They formed the Contract Buyers League, which essentially pushed back and negotiated to change the terms of these agreements so people could build equity and become homeowners. And we thought it was stamped out. We thought it was gone. And now it's come back. And the main difference is they're now big private Wall Street equity companies that are the loan sharks now.
Okay, Cindy is calling in from Fort Lauderdale. Cindy, you said you've had experience with these types of loans. Sorry, I forgot to punch you in. Sorry, Cindy, go ahead. Cindy, are you there from Fort Lauderdale? Okay, we've lost Cindy. We're going to go on to John. John's calling in from Sherman Oaks, California. Good morning, John.
Hi, good morning. You say that you don't get the title from these quote-unquote predatory lenders until after you make that final payment. Well, you don't get the title on a piece of property until you make the final payment on any reputable bank, Bank of America, or whatever the bank happens to be. And in addition, a lot's been publicized about pitfalls in the mortgage industry for the last 10 years since that last collapse. It sounds like you're just trying to help stupid people who are too stupid to look out for their own financial good.
John, there's a big difference here. People, when you buy a house, you actually do get a title and a mortgage, and you have a claim, and it's your property. You actually can then turn around and sell it and recoup whatever funds you've put in. That's very different than a contract for deed where actually you don't really, the title literally does not pass until the end. And I think, one part of what you're saying is true, which is buyer beware. We should all be aware when we enter into these agreements. But I bought a house, and I have to tell you, I don't understand all the terms of my mortgage agreement. And these are situations where people want to own a home. They don't have access to traditional mortgages. These banks have pretty much left these communities. So you see that house, you want to buy that house, you call that 800 number in South Carolina, and they say, you can go in, look at this house, you can own it, all you have to do is sign this paperwork. There's no inspection, there's no truth in lending law. I think this is actually why we need a Consumer Financial Protection Bureau to just create some minimal disclosure protections for this class of transaction. You can't really call it a mortgage. It's between, there are protections for tenants and there are protections for homeowners, but there's no protections for these folks.
And in your piece, you read a short excerpt. It says in 2009, the last year such data was collected, the U.S. Census reported that about 3.5 million people bought their homes through a land contract, more than 4.5% of all homeowners. And you're talking a little bit about the responsibilities of the buyers to keep up basically all of the costs, it sounds like, defraying all of the financial liability from the seller. Do these contracts provide any rights to these buyers?
They're all different, and that's the thing. And most of these land contracts are subject to state and local laws, so it's kind of like a patchwork that's hard to understand, and this is one of the challenges. And I should say there's nothing inherently predatory about a land contract or contract for deed. I mean, I come from Michigan and the Midwest. People sell cabins up north on land contracts because there's no traditional lenders in that market. So that's not uncommon. So what we do need is to sort of say, if people have these, there should be some rules governing these kinds of agreements, so that people don't have the wealth that they have stripped away. And that's the fundamental concern we have, is that some sellers are happy to sort of see people fail and churn these properties, because people end up putting thousands of dollars in just to bring the systems up to code, and then they miss a payment. And it's kind of like having your car repossessed. There's less protections than a mortgage and a truth in lending disclosure.
All right, and again, the lines for this discussion with Chuck Collins are regional. If you're in the Eastern or Central regions, 202-748-8000, Mountain and Pacific regions, 202-748-8001. And if you've had experience with these types of contracts, we have a line for you, 202-748-8002. We have Tommy, who's calling from Milan, Tennessee. Good morning.
Yes, good morning. I have a question about the reverse mortgage scam that's been running on TV for the last 8 or 9 years. I feel like that it's a scam created by the government to convert homes into public housing. But I would like your intake on this subject. I'm just kind of worried about anything that involves the government.
Tommy, I'm not familiar with that situation. I mean, reverse mortgages also refers to people who own a home, but they get an annuity, so that they can have some income as they grow older. I'm not familiar with houses being converted to public housing, so I'm not sure that's happening on a large scale, though. I haven't heard about that.
And on the issue of these land contract, these rent-to-own sort of situations, you talk about the need for regulation, and we had Dodd-Frank in the aftermath of the housing bust of the mid-2000s. Do the regulations that were put in place to address sort of balloon mortgages and other variable rate mortgages that we saw, do they apply to these kind of contracts?
Not really. It's a separate category. And that's why, out of Dodd-Frank, they created the Consumer Financial Protection Bureau, which I think is investigating this. They haven't issued any new rules and that sort of thing, but different jurisdictions. The city of Cincinnati, Ohio, is suing Harbor Portfolio because they're seeing so many of these contract for deed mortgages in the city of Cincinnati. They see that people are getting their wealth stripped away from them, and so they're actually engaged. So cities, some states, the state of Michigan is looking into this. So, but it would really help if the Consumer Financial Protection Bureau sort of issued some overarching consumer protections around these kind of arrangements.
And what could they do? Considering that these people have the right to enter into contracts with, if as you pointed out, what could they do? Could it be more disclosure requirements? Would it prevent people from the sellers from taking so many rights away or tying the hands of the people who are buying? What regulations are we talking about?
I think that they could definitely require more transparency and disclosure. They could require some assessment or appraisal, because that's one of the things is people are buying houses that maybe they're being told it's worth $10,000, but they get into the property and they realize the systems are broken down, so requiring some kind of inspections. Basically the same protections in the truth in lending law that many homeowners get when you sit down and you actually get a mortgage. That would be helpful. You could also say, a contract that extends past a certain time, you should have a point at which people can build some equity. Maybe after 5 years, you begin to get an equity stake. And what I saw in Detroit was people were making all kinds of improvements. They were taking their paychecks and fixing up their houses, but it was as if they were tenants, that they could lose it all in that situation.
All right, Anthony's calling from Mount Sinai, New York. Good morning.
Good morning. Thank you so very much for the opportunity. Mr. Collins, perhaps, you could also do some further research. And, we have the HUD program, which I've been in for some odd years. It's a long-standing. And from my understanding is in total, if not more than $30 billion a year is dumped into that program. And, you know, we're a society of 350 million people, and to have $30 billion a year being channeled into these various political organizations that seem to just abscond the money. And if you did the research, and you would see in 2004, I believe it was, President George Bush had pardoned a mortgage scammer who was fleecing the HUD program for a lot of money, and then Fred Fielding, his chief of staff, had broke it apart, and then Bush had reversed the pardon overnight.
All right, Anthony, I want to see if Chuck has done any research on this topic. His article is about land rent-to-own deeds, but let's talk about this.
Yeah, no, I think, Anthony, what you're saying, I would probably agree with you that people who have broken the law, and I think this is one of the things that's challenging, is you have companies that have been engaged in these predatory practices. Why is it the government, why is it Fannie Mae in its bulk sales program is selling properties to people who have fleeced people in the past? So I think some oversight there would make sense.
So you're saying that a lot of these property owners are equity firms. Talk about who owns this property, how they came to own this property, and who is doing the selling.
Yeah, essentially large Wall Street companies. There's Vision Properties out of South Carolina is one of the big ones. Harbor Portfolio out of Texas, Apollo Capital out of St. Louis. These are companies that they're trying to make money, and they hope by buying up bulk thousands of foreclosed properties that they're going to obviously appreciate or something will happen. But they're stuck with properties that are in terrible condition. And I think part of what they're realizing is, how do we unload these properties that we bought without having to invest any more capital? And this is their path. But I think, you know, they should either fix them up and sell them off in terms of, you know, sell a structurally sound, viable house to people. Don't use this sort of third path to shift all the responsibility and burdens onto low-income people who are just trying to buy a house.
And we saw with the risky loans that were being issued in the early 2000s, that lead to a housing bust. Is there a similar danger with this, with the proliferation of these types of contracts? Could that have an impact later on the market?
It could, if there's an economic bump in the road. A lot of people won't be able to hold on to their homes through these contract for deeds. There'll be a turnover. In a way, this is a symptom of the bust, or the aftershock of that bust, which is, if you go to places like Youngstown, Ohio, or Akron, Ohio, or our hometown of Detroit, you'll see just hundreds and hundreds and thousands, in some cases, of vacant or foreclosed properties. Each day they're sitting there empty, their systems are getting worse. And what do we do with that housing stock? And my concern is that burden is once again being shifted onto some of the same people who were preyed upon by past predatory lenders. In this case, you're going to pay to fix up the house, and if you miss that payment, we're going to take that wealth and go on. And that's the thing that should be stopped.
All right, Kim's calling in from Barstow, California. Good morning.
Good morning, and thank you for C-SPAN. The thing I'm curious about is, how do insurance companies work with this type of loan and house? I mean, can people get insurance, and if they do the insurance companies pay for something that they find down the road? That's my question.
That's a great question, Kim. Many of these properties are uninsured. If you get a traditional mortgage, that your lender is going to require that you insure that house, so that if it burns down, or they'll be able to recover the asset. In this case, these properties are often not insured. So again, we're in this kind of we're in this gray zone between having a landlord who takes responsibility for fixing up the property and insuring the property, and being a homeowner where you actually have the title and the deed, and you can, actually get a loan from a credible lender. In that gray zone, there's all kinds of risks. There's no insurance in some cases, and a lot of times people get into these houses and they discover huge system problems, or that the house is even, there's a lien on the house for back taxes and it wasn't disclosed because there was no proper title research on this. And so they think that they have a claim on this house, but then the sheriff comes along and says, oh, there's another lien on this house. You're going to have to pay that if you want to stay. And those are the stories I saw when I was knocking on doors in Detroit and interviewing other people around this. We have to kind of clean up that middle zone, if you will.
And another excerpt from your piece, it says, deploying contracts for deeds, sellers receive an income stream from rundown properties that would be unbankable with traditional mortgages and unsuitable for renting because of code violations. In the most predatory scenario, sellers unload dilapidated houses on unsophisticated buyers with a contract for deed locking them into an inflated purchase price and high interest rate. After paying out tens of thousands of dollars for repair, a defaulting buyer loses all of their equity. Talk a little bit about the pricing of these. In these cases, sometimes they're worth many times worth the property, what the property was purchased for, and what the property is worth.
Yeah. Well, Kimberly, here, imagine so what again, Vision Property will buy up thousands of properties through the bulk program, maybe costing $3,000 for a house. Then they'll turn around and sell it for $15,000 or $20,000 with this contract for deed. So the property's overpriced. The resident never actually gets an appraisal, so we actually don't know what it's worth. I use that phrase unsophisticated, but we're, in some ways, most of us I have to say I was not a sophisticated, home buyer when I bought a house. I think it's a complicated process. Most people have a real estate agent who says, oh, well, you should get an appraisal. We want to make sure the price is right. You should get an inspection, make sure the systems are working, and then you close on the property. And that's not happening in this case. There's no one looking out for the potential buyer.
All right, Gregory's on the line from Terre Haute, Indiana. You have experience with this kind of contract, Gregory?
No, I was just wondering. My question is, going back to 2008, when the financial crisis hit, why are some of these companies considered too big to fail? And why should the taxpayers bail them out when their thieving, lying ways got them into the situation they're in the first place? That's my question. I'll wait and thank you.
Yeah, Gregory, I share your frustration there, which is how, some of these large banks, they're still, you hear about Wells Fargo and what they're still doing to rip off their own customers. Some of these players made these bad loans. We, the taxpayer, then had to bail them out and kind of pick up the pieces from this foreclosure crisis. And this is another piece that we're having to pick up from that foreclosure crisis. And I think Fannie Mae ended up with lots of these properties, and of course they're under pressure to recoup losses, so they're selling them off in bulk. Well, unfortunately, they sold them back to some of the same predatory actors that helped contribute to the economic meltdown in the first place. And that's the cycle we have to get out of. It'd be great if we had a first-time home buyers program in this country where just like after World War II, people could get a low-interest mortgage, fixed rate, to be able to purchase a home, and that people who are aspiring to home ownership don't have to go into this sort of predatory market just to simply own a home. I think that's what we got away from, and I think you're right. As taxpayers, we're paying again and again, and in the end, we may end up paying to fix up or remove all these foreclosed properties that are blighting communities across the country.
Now, has there been any legislation proposed to address this?
A couple of states, Illinois and Michigan, have both been exploring the impact of this and looking at, because local jurisdictions and state law is where a lot of property law lives, and so that would be important. And I think Ohio, as I mentioned, the city of Cincinnati is trying to clamp down on this practice. So it is up to local jurisdictions. Unfortunately, that's kind of like a patchwork.
Right.
And that's where I think there needs to be some national oversight and at least acknowledgement of this.
And on the federal level, has there been any attempts here in Congress to try to address this yet?
Nope. I think Congressman Elijah Cummings has tried to do hearings on this, tried to get the Consumer Financial Protection Bureau to provide oversight. I think it's a place where there's a vacuum, really.
Okay. Rhett is calling in from Pennsylvania. You had experience with this type of contract?
Hi. Thanks for taking my call, and I really appreciate your guest who's shedding light on this. I think that I have family members, now that you're mentioning this, that got themselves into a deal like this. Although there has been no missed payments and no issues yet, they may not even realize that they have signed on for something like this. I think it's another example of lower and middle class and needy people that are looking for a way into home ownership and participation in accruing wealth and working their way up, once again being taken advantage of, not because they're stupid, as one of your earlier callers said, but because we all aspire to, participating in this great country and in this economy. But we end up getting taken advantage of just because we don't have the sophistication, like your guest said, and I appreciate that. And I am going to have my family members look in carefully to their arrangement. However, they may find that they have no choice. They're all getting older now, living in a very high-cost area that they just may be locked into unless their children want to take over that deed or that deal. But once again, that just locks people into immobility, and it's unfair. And thank you very much.
And I want to play on that point for Red. If you buy a home under a mortgage and you pass away, that property still passes along. What happens to older people who have loans like this and they've put in all this money?
It's a very good question, and there may not be a succession provision. They may be violating the terms because they die. I mean, Rhett is more eloquent this morning than I am. I think there are a lot of people who don't actually realize that that's the paper they sign. They may actually believe they have a deed and they actually have a mortgage, when in fact they should go back and look at that fine print and pull that agreement out of the drawer and take a second look to understand what their rights are in relation to that.
And what should people do if people are in a situation where they have this kind of contract or their family member does, and particularly if they're running into trouble being able to pay for it? Where should they go? What should they do? One
thing is to go to your local legal assistance corporation. The National Consumer Law Center is really one of the leading groups that's looking at this. There's some researchers there and attorneys there that are trying to understand this dynamic. There's a national group called Home Savers. I think you can Google that and find that. They're working in a number of cities that are experiencing this. They're a grassroots group that's just sort of door knocking and just trying to going out to understand this. And they actually just entered into an agreement with Vision Property because they had so many residents who they found exposed to this that the Home Savers entered into a memorandum of agreement with Vision Property out of South Carolina to move people out of these arrangements and into traditional home ownership, to work with them on that.
Okay. Okay, Don's calling from San Clemente, California. Good morning, Don. You just have a few seconds left with Chuck Collins. Go ahead.
Good morning, Chuck. Hi, good morning. I did do quite a few of these. The company I was working for, we bought mortgage notes and foreclosures, and I agree the prices on them were dirt cheap. For example, Detroit, we bought them for $500 and sold them, under land contract for $20,000. But these were $80,000 homes when they were foreclosed on. So they're paying $20 now, and yeah, we paid $500. But the benefits are, their credit's banged up. They can't buy. They're going to rent anyway. Right. So it gives them a feel of home ownership. And I do agree, some of them they have to put their money in and fix up. But Also, you can write off on your taxes the mortgage interest, which is the plus of, so.
I don't think they can deduct this as a traditional home mortgage, deduction. But your point, Don, is really important, which is this is one pathway for people. Their credit may be damaged. They're not going to be able to get access to traditional credit. There is this inventory of properties. For some of the people I met in Detroit were they understood the risks they were taking, and they were sort of saying, "This is my shot," so you have to admire and understand that some people understand that they're actually taking this risk, and they're holding their breath and making sure they don't miss a payment. But I think we can do better as a society. We can do better, and I think with the absence of a good government-backed first-time homebuyer program, which is, think about what built the wealth of the white middle class in this country after World War II. It was tens of thousands of, I had relatives who got farmers' home mortgages, 1% 40-year fixed-rate mortgages. That's what built middle-class white wealth in this country. Why can't we go back and support this next generation of first-time homebuyers of all races to make that possible again? That's really the real answer.
All right, Chuck Collins of the Institute for Policy Studies, as well as a contributor to American Prospect. Thank you so much for joining us today.
Thank you, Kimberly.
And just an update before our next segment, the AP is reporting that another earthquake and aftershock has hit Mexico, a 6.2 magnitude. It says, according to the U.S. Geological Survey, it says a new earthquake to strike Oaxaca in Mexico had a magnitude of 6.2, as people there are still recovering from that massive quake from a few days back. Coming up after the break, attorney and author Michael Berg will be here to discuss consumers' rights in the wake of the massive Equifax data breach. We'll be right back.